Hi, Frank.
Hi, hi, Scott.
Hi.
Hi, Scott.
We were able to weather the storm outside, which was a good sign, and there wasn't too many technology disruptions, which is always good to see. And I guess in terms of just the first question to both of you is, I want to get a little bit of sense on experience. So if you could take a moment maybe to reflect on what you heard today from the various panels, and a little bit of insight on how your organizations are adapting, what areas you're prioritizing, and if there's areas today that struck a chord that may be something you could bring back. So Frank, maybe I'll start with you first, Frank.
Yeah, so Scott, for us, I think our business is affected in 4 different areas. Obviously, we have residential development that's affected. We are a big owner of hotels. We have about 140 hotels, so that is affected. I think what is maybe a bit less affected is our retail business and our commercial assets. So if I just talk about the residential space, obviously we start with construction. Given if you're using traditional construction methods, because foreign workers can't go on site because of the lockdown, that has stopped completely. But we use also PPVC, which is prefabricated, pre-finished volumetric construction, which you will be very familiar with. I think on that side, things are still progressing because they continue to manufacture that or prefab that in factories in Malaysia. So again, going forward, we all know the benefits of PPVC. Has better efficiency in terms of quality is much better, and it provides a much better work environment for the workers. Would the industry start to maybe adopt that a bit more now? So I think that's a question that maybe is interesting to think about. With regards to sales, Scott, sale is slow. Given the fact that it's a very big ticket item, people don't traditionally like to buy things online. But we are trying to make the virtual tour as real as possible. I think that's A, we're trying to do that. B, I think an area that maybe we can improve on is trying to make sure that even the documentation, signing of documents and transacting of documents can go online. So I think a lot of the documentation work, which requires signature is still done physically. So I think that's an area that we are looking to maybe improve. On the hotel side, I think, look, a lot of it has been touched on. Look, we continue to clean more frequently. We continue to use safety equipment like masks, thermal scanning. We continue to refine our takeaway software. But another thing that we are doing now more is using robotics. So I think if you go to some of our hotels under the M brand, we actually have robots delivering room service. It started off as a gimmick, but as I speak to my colleagues, that a lot more. I think one of the barriers to using robotics is obviously the cost. A single robot is about 100 grand. So I think that's something that we are looking to see whether we can bring down the cost.
Frank, maybe just follow up on the sales side. Are people buying right now? Are you able to explain enough of the units that you're trying to put out on the market that people are comfortable on actually following through on closing?
So on the sales side, Scott, people are not buying just by going on the tour. We are still selling, but what we are seeing is that those people that have seen the units pre-COVID are actually now transacting. So if they have not seen the unit pre-COVID, they are not transacting.
Okay. Yeah, it's interesting to see whether or not the technology can get far enough advanced that people are comfortable enough with what they're seeing to be able to transact. So maybe if I can switch to you, it's some of the impressions on what you heard today, and again, what you're going through in terms of Edmund Tai and what you're seeing and hearing from your clients and customers.
Yeah. Well, Edmund Tai is a full-service real estate consulting firm. So we have basically two to three parts of the business. One part is our brokerage, then we have the professional services, and then we have our property management, which is an essential service. So that part of the business continues. For the brokerage side, it is quite severely affected because we can no longer do inspections or bring our clients down to see the properties, show around. In the same way, we can't be doing our auctions as well as for valuation because there are no more site inspections. But I think the themes that came through over and over again about technology, adaptability, flexibility, and communities. I think we see that panning through right through our business as well. Over the years, we've gone through so many cycles. So what we have done is to build a community. Waylin talked about culture, about core values. I think these are the things that bring us and bond us through times like this, especially through social, when we have to go through isolation. And also we have built our business such that we have the professional services side so that in a downturn like this, we still have got cash flow that comes from part of the business while the brokerage side slows down. Technology, I think we've been trying to get onto the tech space for a long time, but we've been making progress. But with this COVID-19, suddenly we all had to, within weeks, just jump onto it and become a lot more sustainable too, because most of us now don't have the luxury of printing, we don't print, and we're starting to get used to it. Adaptability as well. Like what Frank mentioned, for instance, our residential. We are now busy bringing through our prospects, walking them through the virtual galleries, showrooming them all the different products, and walking through each of the developments that we are marketing. As what Frank mentioned, we are still closing deals, but the deals are slow, and they are mainly those that have already seen the projects. But we're not going to be in this phase forever. So we are preparing also so that we can work the grounds, we can get them interested. They will have time to think about what they want to do. So we had to adapt the way we do business. Valuation is the same thing right through. So I think yes.
It's interesting. Actually, if I could shift a little bit to that investment outlook side, given kind of the decrease in sales, like even though you may be able to transact some, the quantity is definitely coming down. It's dropped substantially. It's estimated to continue to drop. In the office space, a lot of people are wait and see right now, or reconsidering. I know we definitely are. Physical retail is pretty much closed, and governments in all of this actually are moving towards pro-tenant type of arrangements where they're trying to keep people in space. They're very pro-tenant in terms of the investment side. Yet there's still very low interest rates. There is a need to replenish land bank. There's a need to expand capacity. Singapore is a relatively small market. So are you seeing people looking for more opportunistic buys? And in that, actually, it came up a couple times. Terrence Tang mentioned this on how do you value properties? Like how do you put a cost on the assets, especially when the cost of managing the asset will go up because of all the new regulations you need to put in place. The effective efficiency of any building will go down. So, your total number per square meter is going to probably change. So given, this kind of environment, how do you see that moving forward? And maybe, Chu Fo, we can start with your thoughts on this.
Yeah, we do have quite a number of prospects who are looking for opportunistic buying. There's still a lot of liquidity in the market, but at this point in time, the asset owners are still holding on to their prices and their expectations. So we don't see meeting of minds and deals being done during this period, but certainly the interest is there. On the next point about valuation, because there's significant uncertainty now regarding the COVID situation, and that leads on to the economy and how are we going to, let's say, circuit breaker or the lockdown, how are we going to gradually ease into it? So that's really not clear. There's no clarity, limited clarity of how this pandemic is going to turn out. So at this point in time, we haven't had the opportunity to look at going forward what the cash flows will look like. And I think that would play a role into the valuation. But what is clear is because the situation is so fluid, whatever valuation that we do now would need to be done more regularly as the situation change because of the material uncertainty.
Yeah, I mean, it's interesting because that should keep you much more busy if you're evaluating things on a more constant basis. Frank, your thoughts around this?
Yeah, so for us, I think, Scott, we can play both on the listed side of real estate and also on the physical side, and we can obviously take stakes in companies. So if you look at what we have done since the lockdown, I think the first week of the lockdown, we actually increased our stake in a company called iRead Global from 12% to 20%. And the reason was that we saw basically a lot of value on the listed side. And I think we still see value on the listed side. Again, on the listed side, if you see the drop from peak to trough, the drop has been about 48%. We don't think that the physical side will drop that much. The second week since we went into lockdown, we took a stake in a non-listed developer in China called Sincere. We took a 50% stake. It's a platform opportunity. It's a deal that we've been working on for the last 18 months, and we managed to close it at a discount. So I think for us, some of my colleagues say that I should work from home a bit more because the feng shui is a lot better for me at home, given the fact that I've been closing a deal every week. So I don't know, but definitely we have still been active. I think for us, again, more value on the listed side. We don't think that the physical side will drop that much. On the physical side, we think that obviously, I think the previous panel has spoke about this. We think that on the listed side, on the non-listed side, I think core will still maintain the value. I think where we will see some distress is probably on the value add and opportunistic side. And I think that was also another point that was also touched on is obviously financing. Even though interest rates have gone up, we think that the banks will be very, very selective to who they lend to, and the spreads might actually be quite high. So we think that even though interest rates have dropped, banks will be very selective, and the spreads that they will charge to lend would be high.
Right, interesting. Yeah, I guess well-managed companies are definitely going to be in front line for looking at being able to acquire, expand, and really enhance their own land positions. Actually, there's a question that came up, Frank, and this is to you, is how is CDL handling the landlord-tenant relationship? How is the company supporting their retail and commercial tenants during these difficult times? So kind of to the point of, governments are very pro-tenant right now. So what's CDL doing?
So I think if you look in the press, whatever rebates that the government is giving to us, we continue to pass back to the tenants. Plus, we are giving tenants, and these are retail tenants, more rebates from CDL's book. So I think if you read in the paper so far, we have given 23 million worth of rebates from CDL.
23 million. And how long are you going to be able to work with your tenants? Actually, are you seeing tenants that are starting to pull out?
Yes, we are trying to help them, but look, obviously some of them won't make it through this crisis, Scott. It's a bit unfortunate.
Yeah. Right. Well, I guess, that might provide opportunities for a rebalancing tenant mix, providing opportunities for others to come in. And I guess, have you started to do some of that in terms of looking at maybe, Chofa, are you, some of your clients as well, looking at that in terms of how they might reposition their properties completely with the balance of their tenant mix? Maybe Chow Fang, maybe start with yourself.
Yeah, I think that in every crisis, there are opportunities. And our clients are really looking at what is it that we need to do, because some of the habits that we've taken on, whether it's more online, shopping, ordering your Grab food, quite a bit of that is going to stay. Although having said that, we are social creatures. And I think when the circuit breaker is off, many of us would go back to shop and we'll go back to socialize. To the thinking, what does this new normal, which will eventually become the normal, what does it look like? For retail, it could be, I think, online, offline, a lot closer integration, a lot more flexibility in space of how, whether it is flexibility in the lease term, flexibility in the use, and so on. And this really pervades right through all the different asset classes as people look at adaptability and flexibility. I think for office too, for Ben has earlier mentioned, will office eventually become the third place, because we no longer have to go to the office just to work. You can work from home. So the office then becomes a place for you to collaborate, to have in-person meetings, and to foster that bond. So the use of space will start to change. And on the other side, how about residential? Do we have to incorporate some home working? Because currently, our traditional homes, in terms of the infrastructure, in terms of that space, is not entirely appropriate for home working. So I think that thinking about the design will really start to change. And it's just not the physical space. It could be the wellness, the mental, the health, the quality of the buildings in terms of biosafety. All that will start to come in. So I think there's really a lot of thought that's going through now. What does a new normal look like, and how do we make ourselves a lot more flexible?
Yeah, I think Scott, just to Chun Fa's point on residential, I think the trend that has been very popular, the last few years is basically shoebox units, building apartments that are really tiny. I think given this home quarantine, I think developers will have to start to think whether, going forward, they really want to build units that are that small, and the people that buy homes, whether do they really want to stay in a shoebox unit. I think that is something that people would start to have to think about.
Yeah, absolutely.
That's a good point.
Sorry.
Go ahead.
Yeah, I think it's about having your personal space. So I think that size becomes important, how we use that space, and even balconies and a view out there of nature. I think that comes into your mental and your emotional wellness. So that whole package of wellness would actually start to feature a lot more wherever we are.
Yeah, one of the actually interesting things that I've really seen is the use of the public space, the public open space, and a really a need for high quality open space, that if people are contained more, that when they do get out, you can see this in terms of the number of people exercising now and going to actually get food, and that's putting a lot of strain on that open space. And that's where I think it really needs to be considered in terms of the holistic overview of the city and the requirements for that space to provide well-being.
Yeah.
Agreed.
Absolutely. Whether it's the pocket parks that is near our office or our homes, all these will become increasingly important.
Right. Yeah, it was interesting with Vilnius recently, because the mayor had converted all of they have got a whole series of plazas, which are now given to the adjacent restaurants free to be able to put chairs. So they've now become outdoor dining places so that they can deal with the right social distances. Just one other point on the mix of use, and I think this is something I guess I've seen a lot more of, is the fulfillment centers. And we talk about the supply chain and retail mix, and I think there's been a shifting pressures put on the supply chain, but those neighborhood fulfillment centers are becoming more important, and that's a whole design exercise which previously hasn't been that well considered. So I think that's something that looking forward might change a lot of our neighborhoods in terms of that last kilometer of delivery to our homes or to our workplaces.
Yes, agree.
And I think we are coming up against the end here. So maybe, Frank, any final thoughts, comments?
No, I think, look, my final thoughts are that 3 points. I think we will go through deglobalization. I think given the trade war that has already started pre-COVID, I think deglobalization will continue. Second point, I think there will be a big rebalancing. I think because of this deglobalization, I think supply chain will start to move away from China. And because of that, there will be a rebalancing. You will start to see certain markets like India, Mexico, Southeast Asia, Vietnam benefit from that. And then finally, I think, sadly, but it's true, the big will just get bigger. I think there will be a lot of consolidation, and I think the big will just get bigger. So.
That's true. Jun Fa, your final thoughts, comments?
Well, the Chinese term for crisis is 危机, which is danger and opportunity. So in every crisis, there are opportunities. And I think also there's a season for everything. So whatever we are in now, it will also come to pass. So I think it's important that we remain positive to really search for the opportunities and how we are going to recreate ourselves with that creative destruction that is happening, so that we position ourselves for the future, for the new community.
Thank you, Jun Fa. Thank you, Frank. Very good points. And hopefully the people joining us today took away a few key points that helped them position better for the future.